Now let's start the lecture of week 6 of Business Management and Accounting and Finance. This week we are going to talk about initial investment and annual growth. Let's share today's goals. We have 3 goals for today. The first one is I want you to learn about investment. Investment is not the same as an expenses. So what is the difference? How you input the numbers about the investment. That's the point 1. And second, we're going to make an annual growth assumptions. We have talked about the numbers in the initial year, but our business plan is not just for 1 year. So how will you make some assumptions about the annual growth? That's point 2. And lastly, we're going to complete the initial business model, business plan in your Mainsheet. So that is the ultimate goal of today's class. Let's start with investment. You have 3 major factors about expenditure. In this case, when you say expenditure, that means some cash out. You pay for something with the cash or even without the cash. You're paying out something, that means expenditures. So you have 3 factors to pay out something for something. The first one, on the left hand side, it is initial investment. That's amount you need to pay at the start. For example, if you do not have any assets means buildings, equipment, premises, or any machines to produce your product, for example. You have to buy them from somewhere or from someone. You have to pay for it. That's the investment you have to pay. So if this is in initial stage, especially before starting the business, that would be your initial investment. And next one in the middle, once you start your business, you have to maintain your business. Especially you have to pay your operation fees, operation cost. That is an amount you have to pay to run your business operations. Maybe the part of them would be like something electricity or water or labor cost to run the business, run the operations. Those are running costs of your operation, your business or operation. That they are all expenses that will directly impact on the profit of the year. And the last one on the right hand side, that's other investments. That's amount you have to pay from time to time during the operation. So you need to renovate the office, for example, or you rebuild your factory. So this is other investments you have to make during your business operation. That is an asset. Okay, what is the main difference between investment and expenses? Main or cost. The main difference is once you make investment by paying some cash, for example, the investment will be your asset. So sometimes this is physical or tangible assets. Sometimes it's not tangible, but asset will be recognized on your balance sheet, not profit and loss as an expense. Okay, if you buy, let's say, the new machine, this is an investment, not expense. because you keep this machine for the coming years as an asset. So the amount you paid for buying this asset or machine will be recognized as an asset on your balance sheet. And how you recognize the amount as an expense in profit and loss, we are going to talk about that later. And if you pay something to run your business during the business year, that will be all expenses, which will be recognized on your profit and loss statement. And the last one, if you buy the new machine or you renovate your office, that will be the part of your asset. So the value or amount of your asset will be higher by the investing additionally. So that will be also asset. So again, the main difference between investment and expense is investment will go to the asset, and the cost or expense will be the cost, the expense on your profit and loss statement. So this is the rules by GAAP. The investment is recognized as an asset, while operation costs are recognized as expense. That is a key point. Okay, that's why we learned there are three main financial statements: balance sheet to know the asset situation, and profit and loss to show your profitability with revenue amount and cost amount, and cash flow statement, which we do not talk about now. And let's move on to how you recognize the investment amount as an expense. Let me share two bases how you recognize investment. The first one, okay, let me start with the accounting rule base. If you strictly follow the accounting rule, you have to follow this case. When you look at the chart in the bottom, let's look at the first year amount. You made some initial investment. Let's think about you buy a new machine, manufacturing machine, okay? And that's the bar shows the amount you paid as an investment to buy the machine. But you do not recognize this whole amount in the year you pay, that is the first year in this case, as an expense. Because if you take this amount as an expense, your profit, how about your profit in this year? Because you have the huge amount of the expense only in the first year, even if you have some sales amount, obviously you have the huge negative profit in the first year. Okay, so in order to avoid this situation, and the machine you bought in the first year will be used not in the second year, third year, the fourth year, in the coming years. So if you buy some assets, generally you will keep using this asset for the coming years. So you have to depreciate. You divide this amount of investments into some years, coming years, and depreciate. Depreciate means you split the amount and you recognize partially the amount you pay as an investment in the coming years. So you do not recognize whole amount of investment in the first year, but instead you split the amount and put in the coming years as an expense. That is called depreciation. So you depreciate the whole amount of the initial investment in the coming years. If you look at this chart, the part of the blue, the box of the blue, means they are depreciated amount in each year. That is a basic rule. Why? Because if you recognize whole amount of the investment in initial year, you cannot show the real profit situation of your business. You definitely have the huge negative amount, but that does not show the real status of your business. Simply because you have paid a lot in the first year as an investment. So this is not fair. So in which case do you need to depreciate? There are many strict rules, but let's say if you invest a huge amount, and what is a huge amount? Like something like you buy a new building, new machine, or even a car, you depreciate for a certain a number of years, and the accounting rule specify how many years you depreciate for a certain asset. As far as I know, if you buy a car, automobile, that you have to depreciate for 6 years. And if you buy the house or something, building, that will be around 20 or 30 years. It depends on the rules. But that is the depreciation rule. And let's go back to the cash base, which we will use for our business plan. Instead of following strictly the accounting rules or depreciation concept, we will not use this. And we will focus on the cash base. That means it's very simple. Yes, we recognize the whole amount initial investment at the time in the year you paid, in this case, the first year. The why? In our simulation, we do not focus the profit amount of each year. Rather than we take the business as a whole, in this case, in the 5-year business plan. So the amount you depreciate or amount you invest, the amount you pay as a total is the same. So you do not have to depreciate, but again, you have the huge negative profits in the first year, but don't care about that. We will look at accumulated profit amount in the year 5. So if you take a total of 5 years, you don't have to care when you recognize the amount you invest. Even the first year or even you depreciate in the certain years, it doesn't matter. If you take a total of in the 5 years, a total sales amount, revenue amount, and total amount you pay even as an investment or expenses, so you just take whole payment amount from the whole sales amount of the 5 year. Then you get what is the total revenue, what is the total profit, and am I going to be positive or am I going to be negative at the end of a 5th year? That is something we'd like to know at the end. So let's take a simple approach. That's cash base. But again, you should know this is not following strictly the accounting rules. So we simplify the approach and then so that we can easily calculate the amount we like to know. That's the total amount, total profit at the end of the 5th year. Okay, but still I want you to understand the difference of the two bases, cash base and accounting rule base. So if you talk about some accounting, you have to think about depreciation. Let's talk about annual growth. Now we talked about the amount in the first year, but we are going to make a business plan for certain years. In my case, it's a 5-year plan. So you can change it to the 10-year or the 8-year or 3 years, but you have to think about how you grow your business in the coming years. I want you to make some assumptions about the annual growth rate. We do not put the numbers in each year, but we will focus on how you grow your business, focusing on the annual growth rate. So we do not do the same exercise as we did for the first year for the year 2 and after. And I want you to make some assumption about the annual growth rate for each item. For example, let's look at the chart, the first line that shows the sales revenue growth amount, growth assumption. In this case, this is pretty much simple assumption. That's 2%. Yes, my business will grow by 2% every year. That's you use this 2% as an annual growth rate. But this is too much simple. If you think this is too much simple, then for example, next line, next chart, indirect labor costs. What do you think about labor cost growth in the future? If you need to add more number of the people to your as your labor cost as you grow the business itself, then in this case, yes, I'm going to grow my labor force by 10% in the first year, but I do not need to grow the number of people in a linear way like this. I will need some number of laborers. I need to grow especially in the first stage, but after that, I do not such many people. It will be stable. In such case, growth rate will be reduced as the year goes by. So first, I will grow the labor force by 10%, but next year I just need plus 5%, and after that, I will keep flat because I will have enough labor force at the year 3. So likewise, you can make your assumptions, but especially in the beginning, the initial stage, initial exercise, I suggest you should apply very simple assumption, which means one single growth ratio for every year. So you can adjust or you can change annual growth ratio later on, but okay, especially for the initial simulation, the initial business model, I encourage you to apply the simple one single growth ratio assumption. This is some example of the growth. The first one, simple linear growth, that is one I encourage you to apply in the initial business model. So you can apply the sales stable growth, a number of customer or COGS or something. So let's try to apply this assumption first. But if you look at the reality, this may not be the case. Yeah, that's true. When you look at the number 2, exponential growth, if you talk about IT business or some startup new business, if you have very aggressive business plan, yes, sometimes you can apply this curve. It is called the exponential growth. So you add the percentage in the coming future years. So your growth is not just linear. So this is you can exponentially grow your business. Yes, you can apply this one, but your business plan will be a bit complicated because you have to manually add the numbers, growth numbers. Last one is it is called logistic growth. Yes, you have this. You can see some growth, the sales growth, but any industry, any business will have some limitation. So your business will sometimes saturate. In such case, you cannot grow your business forever. Sometimes we have some stable, you'll be in a stable stage. So if you reflect this growth into your business model, yes, you should change the annual growth. You should limit your growth ratio at a certain time. So you can manually change this assumption later on, but let's stick to the simple one for your initial business model. Now let's move on to the spreadsheet work. You can start working after you finish watching this video, but let me explain what to do with your spreadsheet or with your business plan. First one is about investment assumption. I want you to make initial investments. It depends on the scope of your business. It depends on your business model itself. What asset do you need in the beginning before you start? Do you need to buy an office? Do you need to re-innovate a factory? Or would you buy the factory itself? Or how about the outlet? Outlet itself? How about do you need to renovate the outlet if you buy from somebody else? So that's something you have to think about. And in terms of the amount of the investment, you can think it by yourself, but here's some suggestions or information you get about outlet renovation, the product development cost, and the production line installment, or any other cost. If you have some more, then you do not have to strictly follow this information, but if you don't have any specific idea, just choose some numbers from this list. And if you think you need to break down the investment, if you have some components or the factors of the investment, you can add lines as you like. You don't have to have just one single line for the investment. So add some lines or a line in your Mainsheet. My suggestion for you is add line above the revenue. So the initial investment line at the first line, then followed by revenue, cost, and profits. I will show you my Mainsheet, but this is my suggestion. But this is not a requirement. This is not a rule. Once you make the assumption about the investment, the next one is growth assumptions. Now it's your turn to make your own assumption about your business items. Something like number of sales, how you grow, how much you can grow your business, and how about the price? Are you going to keep the price flat, the same? Or how about the COGS? What do you think about the material cost? It is going up or is it going down? So it depends. But in general, if you grow your business, you can have some volume of the sales. So you have some buying power against the suppliers. In such case, you can negotiate to reduce the material cost. That's part of COGS. So think about your business model, business strategy, and how you grow your business. Indirect labor cost, what do you think? Where is your business? Is it Japan? So in this case, maybe in certain years you cannot see huge growth of the labor cost. But if you are in your business in some other part of the world, if your labor, please look at the labor cost situation. Also the inflation rate. So you can reflect all the reality into your business model. And other expenses, maybe you have a huge amount of the promotion in the beginning, but you can reduce in the coming years. It's all about your business strategy and a business plan. So carefully think about it. But all those assumptions has to be consistent with your business strategy and business model, business plan. Okay? And I will demonstrate this one after this video, but let me briefly share with you how the spreadsheet will work. First, I want you to add a line or lines for investment. In my case, this is the simplest case. I just added a line for the investment. And I put 100 million yen in the initial year. That's it. And then next, growth assumption, line K. Yes, I made some growth assumption for number of units sold, which is 5% in my case. A unit price, I will keep it at flat. If your initial business plan is just keeping flat, please put 0% because you may change this percent in your simulation later on. And when you look at the COGS, my assumption is going down by 2% every year because I thought I can have more buying power against the supplier, so I can get all those material with lower rate. And number of the people, yes, 20% growth, but until 2018, this is 2023. So I will keep flat after that year. And unit labor cost, 1% increase, and other expenses, yes, I will keep flat. That's my plan. So I will show you how to do it. I will demonstrate on your spreadsheet after this video. But this is the goal of today. And I will show you this one as well. But I want you to learn how to use absolute reference. Once you made your growth assumption, let's say 5% for number of units sold, in the fiscal year 2022, in line G, I want you to make some formula. In this case, equal F6. That is amount of a number of units sold of FY 2021 in the previous year, year 1, times bracket 1 plus. I refer the cell K6. That is 5%. And close the bracket. What does it mean by 1 plus K6? Let's forget about the dollar marks now. 1 plus K6 means 1.05. So you have to multiply 100%, 105% with the previous number, 44100. Don't use just 5%. If you do so, you get just 5% of the number of units sold in the year 2. You have to multiply 105% rather than 5%. That's why you have to add 1. And what does it mean by those dollar marks? That means you have to fix the cells to refer to. That's case 6. I will demonstrate how to do it, but this is called absolute reference. Why do you need that? Once you make the formula for G in the cell G6, that's the second year, you can simply drag and copy to the right. Once you fix the cell K6, you can just keep this K6 while you're copying the cell to the right. So you do not have to change the cell to refer to, in this case, the K6. You want to fix the cell. So that's absolute reference. You can do it by pressing function 4 key. Let's do it together. Let me talk about an assignment. Yes, we will complete your business plan after this video, but if you cannot complete everything today, that's your assignment for next week. And the second one, I want you to prepare simple one that will be now, brief explanation about your business plan with your spreadsheet. Once you complete the spreadsheet, in the next class, I want you to share about your business plan. The points I want you to raise are something like this. What is your overall business? I want you to explain how your business works, and what is your business scope, and what is your business strategy, and how did you make your assumption? How about the price and products? Are you going to differentiate by product, or what is your promotion plan, etc.? And your business strategy, the business sales strategy, how you reflect all strategy into your numbers in your plan. And ultimately, when and how much you get as a profit. So I want to see your business will work from the financial viewpoint. So you do not have to make the clear, a beautiful presentation, but I want you to briefly make your explanation, your explanation about your business plan with numbers. Okay, let's do some exercise.